Hello, dear listeners. Today, we're diving into the intriguing world of Simplified Swing Trading, a book penned by Richard Godwin. Swing trading is an effective strategy in the investment world, aiming to capitalize on short-term price movements. But what sets this method apart from other trading styles, and why is it so important? Swing trading is perfect for investors who want to avoid the fast pace of day trading. By steering clear of large daily fluctuations and focusing on longer-term price movements, swing trading offers a less stressful trading experience. For instance, predicting a 5% rise in a stock and profiting from this move over a few days is a fundamental goal for swing traders. This strategy requires less capital and involves less risk. Risk management is crucial here. By risking only 1% of your capital, you can keep potential losses under control. Additionally, using stop-loss orders can help limit your losses. Another advantage of swing trading is the flexibility it offers in choosing among various investment instruments. You can utilize chart analysis to identify potential buy and sell points in stocks, ETFs, bonds, or commodities. Technical indicators, like support and resistance levels, can help you make more informed investment decisions. In conclusion, swing trading is a dynamic and profitable strategy for those looking to benefit from market fluctuations. However, remember that success in this field requires analyzing market movements thoroughly and making strategic decisions. In the next segment, we'll delve deeper into this strategy. Until then, take care. Richard Godwin, the author of Simplified Swing Trading, holds a significant place in the financial world. Godwin is a finance expert who has conducted extensive research and practical applications on investment strategies for many years. His vast experience in the investment world has given him the ability to explain complex strategies like swing trading in a simpler and more understandable language. His writing career is filled with numerous books and articles aimed at deepening investors' knowledge and enhancing their skills. Simplified Swing Trading was first published in 2020, a time when the world was under the influence of the COVID-19 pandemic, and uncertainty dominated financial markets. People were moving away from traditional investment methods towards more flexible and quick-return strategies. In this context, Godwin aimed to bring the opportunities and strategies offered by swing trading to a broader audience. The book's purpose was to make this seemingly complex strategy understandable for investors and to enable them to benefit more effectively from market fluctuations. Historically, simplified swing trading marks a significant turning point in the financial world. The book provided investors with the tools and knowledge necessary to better analyze market trends, encouraging them to make more informed and strategic decisions. The increased volatility in markets during the pandemic made swing trading strategies even more attractive. Godwin's work served as a guide for many investors during this period, while also making a valuable contribution to the financial education literature. In summary, Richard Godwin's Simplified Swing Trading has become an indispensable resource for investors looking to profit from market fluctuations. The book guides both beginners and experienced traders in effectively applying swing trading strategies. By simplifying complex financial terms, Godwin offers investors the opportunity to trade safely and profitably. Hello, dear listeners, today we're embarking on a journey into the world of swing trading. Swing trading is a strategy where investors aim to profit from short-term fluctuations in the markets. Unlike day trading, swing traders maintain their positions over a longer period, ranging from a few days to weeks. So, what are the fundamentals of swing trading, and how can we apply this strategy effectively? Let's dive into these topics in detail. The primary goal of swing trading is to take advantage of short-term price changes in the markets. For example, if an investor plans to buy Amazon shares and sell them within a few weeks, this person is a swing trader. The key here is to understand the overall market trend and position accordingly. Swing trading stands out as a strategy that requires less capital and can be less risky compared to day trading. For instance, if you anticipate a 5% increase in a stock over a few days, you can take a position during this period and benefit from this rise. A crucial element of swing trading is determining which instruments to use in the markets. Making the right choice among various investment tools, such as stocks, bonds, commodities, and currencies, is of critical importance for swing traders. For example, support and resistance levels can help you identify potential buy and sell points. These levels, visible on a stock's charts, facilitate the decision-making processes of investors. Risk management is an indispensable part of swing trading. By risking only 1% of your capital, you minimize potential losses. Using stop-loss orders allows you to keep your losses under control. For instance, if you bought a stock at $20 per share and set a stop-loss order to sell if the price falls to $19.75, your loss would be limited to $25. With such strategies, investors become more resilient to market fluctuations. Swing trading also requires correct interpretation of market signals. For instance, indecision candles indicate periods of uncertainty in the market and potential turning points. A hammer candle shows that despite downward pressure, the price has started to rise, which could be a buying opportunity. Oscillators are used to determine whether an asset is overbought or oversold. For example, when a stock enters an overbought condition, the likelihood of the price falling increases. In this case, investors can look for oversold signals to evaluate buying opportunities. Moving averages are another tool frequently used in swing trading strategies. Exponential and simple moving averages help traders determine market trends. Concepts like the golden cross and death cross are intersection points of moving averages. A golden cross occurs when a short-term average crosses above a long-term average, giving a bullish signal, while a death cross is considered a bearish signal. Monitoring such signals makes it easier for investors to buy or sell at the right time. Graphical analyses are also essential components of swing trading. Chart patterns like flag formations play a significant role in the decision-making process of investors. By considering such technical indicators and market sentiment, investors can make more informed moves. For instance, when a stock's price forms a specific flag pattern, it usually indicates that the price will continue in the current trend direction. Bollinger Bands and Fibonacci levels are also frequently used technical indicators in swing trading. Bollinger Bands are used to measure market volatility, and when prices move outside the bands, it can signal overbought or oversold conditions. Fibonacci levels are used to predict when a retracement will end. When prices rebound from important Fibonacci levels like 61.8%, buying opportunities may arise. One of the advantages of swing trading is its focus on short-term profit opportunities, unlike long-term investment vehicles like retirement funds. Swing traders aim to make quick profits by following short-term trends in the markets. They operate on the principle of buying low and selling high. Therefore, following market news and analyzing signals is the key to being a successful swing trader. Finally, it's essential to remember that swing trading requires a disciplined approach. Instead of making hasty decisions, you should stick to your predetermined exit criteria. For example, you might set a rule to sell when a stock's price rises by 10%. Managing losses is as important as collecting gains. Additionally, diversifying your investments is a critical strategy to avoid putting all your eggs in one basket. By investing in multiple stocks, you can spread your risks. Swing trading offers a dynamic and profitable strategy for investors. However, to be successful in this field, it's important to analyze market movements thoroughly and make strategic decisions. Having realistic expectations, treating the stock market like a business, and being open to continuous learning are just a few ways to succeed in swing trading. I hope this segment has helped you take more informed steps in the world of swing trading. See you in the next segment. Goodbye. Here are 5 key lessons you can apply to your life from this book. 1. Risk management and discipline. Risk management is the key to success in the world of swing trading. Richard Godwin suggests risking only 1% of your capital on each trade. This strategy helps you avoid significant losses and protect your capital. For example, if you have a portfolio worth $10,000, you should be willing to lose a maximum of $100 per trade. In addition, using stop-loss orders can further limit your risks. By adopting a disciplined approach, you should act with planned and strategic moves instead of emotional decisions. 2. Technical analysis and chart reading skills. Another way to succeed in swing trading is through technical analysis. The book teaches you how to identify support and resistance levels on charts. These levels help you make more informed buy and sell decisions. For instance, when a stock price approaches a certain support level, you might consider buying at this point. Additionally, you can evaluate market overbought or oversold conditions with technical indicators like oscillators. By effectively using such tools, you can better predict market movements. 3. Understanding markets and trends. Swing trading requires understanding market trends. Godwin emphasizes the importance of recognizing short-term trends. This helps you determine which securities are suitable for buying or selling. For example, you can take advantage of market fluctuations with tools like exchange-traded funds, ETFs. By following indices like the S&P 500, you can evaluate market trends and take strategic positions. Correctly analyzing trends lays a more solid foundation for your investment decisions. 4. Timing and patience. Timing is one of the cornerstones of swing trading. Making purchases or sales at the right time in the market allows you to maximize your profits. For this, it's important to be patient and not act hastily. Godwin states that unlike day trading, swing trading requires a longer-term perspective. For instance, if you anticipate that a stock will gain value within a few weeks, it's important to patiently wait for this period and stick to your strategy. A patient approach enables you to make healthier and more profitable investments. 5. Continuous learning and adaptation. Finally, continuous learning and adaptation are keys to success in swing trading. Markets constantly change, and it's important to keep up with these changes. Godwin emphasizes the necessity of following market news and learning new strategies. For example, learning a new technical indicator or observing new trends in the market can help you develop your investment strategy. Being open to learning and adapting to changing market conditions brings long-term success. These 5 key lessons can open the doors to success in the world of swing trading. With disciplined risk management, technical analysis skills, understanding market trends, timing and patience, continuous learning, and adaptation, you can take solid steps in swing trading. With these strategies, you can make more informed and profitable decisions in the investment world. If you enjoyed this book, check out these recommendations. My first suggestion is Alexander Elder's Trading for a Living. This book focuses on how investors can make better decisions psychologically and strategically. Elder explains many topics, from technical analysis to risk management, in a straightforward manner. If you want to succeed in swing trading, you should definitely check out this book. My second recommendation is John J. Murphy's Technical Analysis of the Financial Markets. Technical analysis is crucial in swing trading, and Murphy's book is one of the most comprehensive resources on this topic. By delving deeply into topics such as chart reading, trends, and indicators, it helps investors make more informed decisions. If you want to learn the language of charts, this book is ideal for you. Lastly, I recommend Jack D. Schwager's Market Wizards. This work contains stories and tips from many traders who have achieved success with different investment strategies. You will learn ways to succeed in swing trading from these experienced names. It's an excellent resource for those looking for different perspectives and strategies. With these books, you can deepen your knowledge of swing trading and become a better trader. We've reached the end of our journey in the world of swing trading. In Richard Godwin's Simplified Swing Trading, we learned how investors can profit with less risk. Swing trading is one of the effective ways to profit from short-term price movements. Throughout the book, we examined many important strategies, from chart analysis